So everybody thinks that the fourth Bitcoin halving is happening tomorrow, but today I'm going to make the case for why we're actually going to see a Bitcoin double halving in this 2024 cycle. Now, don't get me wrong, I know that sounds strange, and I also know it is very dangerous to claim that this time could be different. But things are already different this cycle. We've hit a new all-time high before the halving for the first time in Bitcoin's life. Historically, in 2012, 2016, and 2020, we had to wait a number of months before we were blessed with a face-melting Bitcoin rally. But 2024 poses to be completely different. So we're going to be explaining why 2024 is different by looking at what the Bitcoin double halving is in 2024. We're going to be having a look at what impact Michael Saylor, as well as the flood of Bitcoin spot ETFs, might have on Bitcoin's technological adoption curve. And we're also going to be analyzing why the diminishing returns theory of Bitcoin could be broken to the upside in the upcoming Bitcoin bull market. Or as Michael Saylor might say,
what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce we bought it, we're not ashamed of it, we're going to buy more? All your models are destroyed, completely devastated. Bitcoin goes to the moon.
So what are all of these models that Michael Saylor is talking about, and what is the diminishing returns theory of Bitcoin? Well, I think this chart from Croesus tells us everything we need to know about the diminishing returns theory of Bitcoin. It postulates that every 4 years when we see a Bitcoin halving event, we see a Bitcoin bull market after that event, okay? This is all rooted in very simple supply and demand economics. These people claim that when the new supply of Bitcoin being released and paid to the miners every 10 minutes gets cut in half, this has to push the Bitcoin price up, okay? When you have less supply of something, the price has to go up if the demand remains the same. Again, we're going to revisit this concept of demand a little bit later on in this video, where we're looking at why the diminishing returns theory of Bitcoin is going to fail. But let's park that one for now, and let's look at the reduced growth of Bitcoin that we do see in each of these subsequent 4-year Bitcoin bull markets. So in 2012, when the first Bitcoin halving happened, Bitcoin rallied from around $12 in 2012 to over $1,200 in 2013. So you saw a 100x growth in the price of Bitcoin in that bull market. 4 years later, after the 2016 halving, Bitcoin rallied from around $600 to $20,000, and that bull market gave you a 30x growth in the price of Bitcoin. So again, this was less than the 2012 bull market. Then if we fast forward another 4 years to the 2020 halving, what we saw was that the price of Bitcoin rallied from around $8,000 all the way up to $69,000 in 2021, and that gave you an 8x growth. Again, this was less than what you saw in the 2017 halving, which was less than what you saw in the 2012 Bitcoin bull market. And many people are saying, hey, look, let's extrapolate this data out. We believe, we're nearly sure of the fact that in the 2024 halving and subsequent bull market that many people believe we're going to see less than 8x growth in the price of Bitcoin, because that's what we saw in 2020. This is so easy. Let's use all of these models to continue extrapolating this data out into the future, and we can perfectly predict where the Bitcoin bottoms and the Bitcoin tops are going to be. If only it was that easy, okay? So let's begin to start analyzing why these theories and models could be wrong. So the first reason why we should be thinking a little bit more about these theories of diminishing returns and why they could be a little bit flawed is the fact that they don't actually consider the fact that price is set at the margins, okay? This means we should not be using the circulating supply of Bitcoin when we're running our Bitcoin halving supply shock calculations. We should actually be looking at what kind of Bitcoin is actually circulating on a daily basis and is available for buying and selling, okay? Most people would know that around 4 million Bitcoins are actually lost today in 2024. And most people would also know that for the past 4 years, we're watching something that we've never seen before in Bitcoin's life. We are watching coins precipitously leave the exchanges, okay? And the exchanges are where you go to buy and sell your Bitcoin. But for the first time in Bitcoin's life, there is a lot less Bitcoin actually available for sale. So we can see here by this chart, for the first 12 years of Bitcoin's life, the balance of Bitcoin that was actually held on exchanges only grew. So we can see this grew all the way from 2009 to 2020, and there was 3.1 million Bitcoin on exchanges in March of 2020 until something changed. For the first time in Bitcoin's life, coins actually started leaving exchanges in 2020. And now today, depending upon which chart you look at, there's around 2 million Bitcoin sitting on exchanges for sale. So what we've seen over the past 4 years is over 35% of all the available Bitcoin for sale on exchanges disappear. Okay, it's gone somewhere. We don't know where it's gone, but when we do look at on-chain data, we can see that the number of coins held by long-term holders is actually at an all-time high. Okay, so this is interesting, and I think this is the data we should be considering more often when we're analyzing what kind of impact a Bitcoin halving is going to have. Okay, so I believe we should be looking at the year-over-year supply shock the halving is going to have measured against the highly liquid supply of Bitcoin, and that is the Bitcoin that's actually available for sale. So while we're talking about on-chain data, let's explain what a liquid coin actually is. So we can see here that if an entity sells less than 25% of all the Bitcoin it accumulates in its wallet, that means we actually classify that wallet or that entity as an illiquid entity. So that means it is hodling more than 75% of the Bitcoin it buys, and that means it's classified as illiquid. Okay, so I believe we should be looking at the highly liquid supply of Bitcoin, and this is the Bitcoin that's pretty much circulates on exchanges for sale on a regular basis. This chart here is actually measuring the available Bitcoin on exchanges for sale, and it's also measuring the highly liquid supply of Bitcoin. So now that we know what the highly liquid supply of Bitcoin is, let's go back to that trusty table that we had earlier on in today's video. And you'll notice I've actually revealed those two rows that were originally blurred out, because now what I've done is I've actually, again, ran some numbers and I've analyzed the year-over-year supply shock against the highly liquid supply of Bitcoin that was available at the time of each halving in 2012, 2016, 2020, and what we estimate will be available in 2024 if we extrapolate the past 3 years of data forward into the future. So you can see here, I've actually estimated that there is a supply shock of around 164% in that 2012 halving. 2016, we saw a supply shock of 36.6%. So this is actually 77% less than the supply shock we saw in 2012. So again, if we see a halving, that theoretically means we should see a supply shock of around 100% each Bitcoin halving. So 77, that's pretty close to a typical halving, so to say. And then in 2020, what did we see? We saw a supply shock of 9.6%. So this was 85% less than the supply shock we saw in 2016. This is close to 100%. So like a typical halving, so to say. But when we look at 2024, this is when something interesting actually emerges. We can see that we are estimated to see a supply shock of around 6.83%, and this is only 29% less than the supply shock we saw in 2020. So this is a far cry from a halving, and this is why some people are saying, hey, look, the supply shock we're going to have in 2024 is actually very similar and very close to the supply shock we saw in the 2020 Bitcoin halving. So this is why some people are saying that we're actually going to see a Bitcoin double halving in 2024. And this trend change that we're seeing is all because of the fact that there is simply less Bitcoin available on exchanges for sale. There is less highly liquid Bitcoin on exchanges than there was in 2020 and previous years. So that is the first reason for why these theories surrounding diminishing returns and all of these cute and fancy models could actually be flawed moving forward into the future. They don't take into consideration the shrinking amount of Bitcoin actually available on exchanges for sale. So what is the second reason for why we should actually be questioning these models? This all comes down to Bitcoin adoption, okay? So these models don't actually take into consideration the fact that Bitcoin is a technology and technologies get adopted in these exponential waves. They assume that the amount of adoption we've seen in the first 15 years of Bitcoin stays constant. They're essentially extrapolating that 15 years forwards into the future. And that's simply not how technologies get adopted, okay? If we want to look at a couple of models about how technologies have been adopted in the past 50 years, I like to look at this chart here. So this chart here is looking at the adoption rates of the automobile, the internet, and the smartphone, and it is contrasting those adoption levels against Bitcoin. So it shows that these three technologies that have gone mainstream, they follow a very typical path in their mainstreaming of adoption, so to say. We can see here that the models actually show that it takes them around 12 years to go from 0% adoption to 10% adoption. But then once an inflection point is reached and the adoption of these technologies starts to go exponential, it actually took these three technologies around the same amount of time. So again, 12 years to go from that 10% adoption to around 90% adoption. And this chart here is kind of looking at Bitcoin through a similar lens. It's saying, hey, look, Bitcoin might hit an inflection point, and when it does reach that inflection point, we expect the adoption rate of Bitcoin to increase, okay? Now, this obviously opens a big can of worms. What is the Bitcoin adoption? That's one of the most common arguments in the Bitcoin space today, and it is very difficult to actually measure the adoption levels of Bitcoin. Some people say it's much higher. Some people say we're super early in the Bitcoin space. It doesn't matter where we are. All we can say is that if Bitcoin is adopted by the majority of society, it wouldn't really make sense for Bitcoin to be adopted in this very simple, very linear, very predictable way, okay? There is going to come a point in time when the adoption of Bitcoin is going to go through an exponential phase, okay? We can see by this chart here, I really like this one. It's actually looking at the adoption levels of every technology over the past 100 or 150 years. And we can see each subsequent technological revolution is being adopted at an ever increasing pace. The faster that our society digitizes, the faster that society is actually recognizing the importance of this new technology, and they're adopting it even quicker than the prior technology. So many people like to look at this chart and then they say, hey, look, Bitcoin's been adopted at the same pace that the internet was in its first 10 to 15 years. Is Bitcoin about to go through an exponential phase of adoption? Nobody knows exactly what's going to come next in Bitcoin. All we can recognize is the past couple of years, it does feel like things are changing pretty rapidly in the Bitcoin space. Like, let's think about this for a second. In the first 12 years of Bitcoin, between 2008 and 2020, what nation states were adopting Bitcoin? What public companies were putting Bitcoin on its balance sheet as a superior treasury reserve asset, like what Michael Saylor has done at MicroStrategy? What nation states were mining Bitcoin? What spot Bitcoin ETFs were approved before 2020? None. Again, absolutely none of this kind of adoption was taking place before 2020 in Bitcoin's first 12 years. But in the past 2 to 3 years, we're seeing all of this and more, okay? We're watching El Salvador make Bitcoin legal tender. We're watching Michael Saylor accumulate 189,000 Bitcoin. He is closing in on that 210,000 Bitcoin milestone, where he actually holds nearly 1% of the total Bitcoin supply. We're watching nation states like El Salvador, Oman, and the Kingdom of Bhutan all invest around $1 billion into Bitcoin mining. Things are changing pretty rapidly for a variety of different reasons, okay? So all we know is that the big players, for the first time in Bitcoin's life, have actually become interested in Bitcoin since 2020. And this should at least force us to question some of the narratives about these people who are so sure that they know where the Bitcoin price is going to go in the next Bitcoin bull market. market, okay? We truly are living through unprecedented times. Michael Saylor even recently said that the approval of a Bitcoin spot ETF is the largest thing that's happened on Wall Street for over 30 years. So if you want to learn a little bit more about what the Bitcoin spot ETF is going to do for Bitcoin, you guys are in luck because we recently filmed a video on this topic. I'm going to pop a link on screen right about there that's going to take you straight to that video. So I hope you guys really enjoyed that video. I popped up on screen right there. Hope you really enjoyed this one. Let us know in the comments down below what you thought of today's deep dive into the Bitcoin double halving.